basis. So we want to just, again, thank everybody for joining us today. We can go to the next slide. So real quick, before we get into the topic today, the rentals market you haven't thought about, a really cool topic I'm very excited to hear about. Let's first chat a little bit about who Million Acres is, what we're doing, and why we're talking to you about real estate each month. We are an organization who's dedicated to making real estate investing accessible to everybody. And it's certainly real estate investing is something that you may have thought about adding to your portfolio, but you're not quite sure how. You don't know if this is something you go in through stocks like REITs, or if you're doing rental properties or house flipping. So there's a lot of different flavors of real estate investing. And we're, as a company, we're trying to make this simple and accessible for everybody. We're a Motley Fool service dedicated to making the world smarter, happier, and richer through real estate investing. And we are staffed by experts in real estate investing throughout the company. So that's a little bit about us. And what I want to do now is transition over to our speaker and introduce Lisa Phillips. So we're thrilled to have Lisa. Lisa's a tremendous speaker and expert in a lot of different categories. And she's the founder of AffordableRealEstateInvestments.com. She helps Black professionals build profitable rental property portfolios. Her clients are generally going to be first generation college, first generation white collar. She guides them towards real estate wealth by investing in minority neighborhoods. And she's got a background as an electrical engineer, but turned to real estate after a layoff and invests in working class neighborhoods and cities across the country. Lisa also runs a wildly successful Facebook group called Sub 30K Mastermind Group. So with that, I'm going to go ahead and turn it over to our capable speaker today. Lisa, you can take over, and I'll circle back at the end.
Thank you so much. And I'm honored to be a part of the Motley Fool family. And I'm really glad that you guys are looking at maybe opportunities that aren't necessarily so mainstream, but are very successful for certain groups of people who are in your audience. So thank you so much for the introduction. So I'll get right into it and tell you what I focus on and what type of rental homes. We generally, me and my target audience, because we are first generational college, because we are first generation white collar, this is the first time we had any sort of money really that we could hold on to in my community. So when we started looking at real estate investing, we had to look at the lowest priced homes. Those lowest priced homes are generally under $80,000. And we found that because of that price range, this was something that we could actually afford to invest in because the down payment requirements were a lot lower and much more accessible to my audience. On an $80,000 house, you're looking at $16,000 down payment. I'm not going to get too technical on this overview, but it's something that's more accessible to the regular white collar person. Now, there are nuances that come into this price range that everyone should be very aware of. So it's not necessarily for everyone, but it is definitely for a certain flavor and brand of real estate investor. So with those lower down payment, it is more accessible. At the lower range, they tend to be in minority neighborhoods, classified as low income or working class. Many of my clients who are Black professionals tend to, and I have about 12,000 member Facebook group of Black investors. I have 20,000 YouTube's, about 50,000 person platform. And we all tend to share the same qualities. We're first generation college, but I found that most people who resonated with this message actually came from these low income or working class neighborhoods. So it was actually a really good fit. These were the neighborhoods that were pretty much overlooked by mainstream investors because they were not as successful. And we can get into that a little later. But definitely for us, it was going home. So even though, I might have grew up in Vegas and I'm investing in, say, Baltimore, well, I still understand culturally and even socioeconomically, as someone who came from a working class neighborhood, what is going on, the people, and how to treat them with a lot more respect than maybe other target audiences didn't, because they just weren't familiar and had a view of them that was maybe shaped by media or perception. So we found that it was really successful for us. Crime can also be an issue, so learning how to circumnavigate this is also crucial. So I really spend some time talking about who the target audience is, because it's not for everyone, but for those who are familiar with these type of neighborhoods or grew up in these type of neighborhoods, it's a really good symbiotic. It's a really good fit. So it's about sustainability and long-term housing. It's not a flipping and gentrification move. Actually understanding and caring about these communities actually have an economic impact because you're not squeezing every dollar out of them. And with time, they understand that you actually get long term clients. So we get clients from 3, 4, 10, 20 plus years. Understanding the nature of the people in the communities, you actually understand that they don't move around a lot. I know for me and my, I'm a consultant for, the big four firms. And, we moved around every year and a half, right? That has economic costs as a rental property owner, not only the time invested in cleaning it up and turning it over and finding a new tenant, but just like the turnover costs can take out, quite a significant portion of your profits each year. So turnover is not the thing, but I found in me and my target audience that when we're in these communities, because of the nature of the people that we're servicing, it's definitely something that they stay in long term. You have people who stay in a property for 20 plus years. And if you combine that with someone who tells you what's going on, is responsive, and pays their rent on time every single month, you have a winning combination for a long term, low cost, low headache rental property. But it is more about just cheap housing. It's about community impact as well. So I always tell people you need to be discerning. It helps if you're from these neighborhoods and you have an ability to understand people who are not from your same social economic class. And also, sometimes people outside my target audience might go, "Hey, I heard you look at cheap houses. Show me how." And because I want to flip, and I'm like, "Hey, like these are people who are already at the lowest tier in wages, and this is the most affordable neighborhood that's safe that they can live in. You really want to flip and push them out and put other people in." And sometimes you really have to think about this. Like, what you can do whatever you want to, but me and my investors have definitely erred on the side of we want to offer long-term housing. We see these people as equal to us, and we want to make sure that they have long-term housing. We don't just push them out so people with more money can move in, because these all vulnerable neighborhoods, and that is sort of predatory. So we're very, very strong that this is about long-term sustainable housing. This is not about flipping. And it's just very interesting outside of my target audience. That's the first thing they think. Like, it's not like they don't have a concept of providing maybe stable long-term housing to people in these neighborhoods, just a cheap flip. I'm a buy and hold investor in general, so I'm not really into flipping because I don't like paying capital gains. I like passive income, and I like low headache passive income. So I always have to say, hey, that's not what we're about. You can find your information other places, and good luck. I do find that most of the mainstream information that is about this particular demographic tend to be from people who aren't familiar with the demographic. So they do have a negative view on it because they did not understand it as much, didn't understand the people as much. And rental properties is a people game. So if you don't understand your servants, the clients you're servicing, there's going to be tension and conflicts that can arise. And also, if you're not really up to speed as a landlord or rental property owner, that also is going to play into it, because you might project and think it's everyone else the problem, but a good landlord would have been able to vet that tenant properly. Someone who built their skills would have been able to see these issues ahead of time before they escalated. So, as I like to always say, let's not always project and say it's our tenants' fault, because as we get better at landlords, the less headaches we have. So we always have to stay up to date, relevant ways to, even during this COVID crisis, there are ways to handle this by being proactive. So I'll give you just one example before I go ahead. One of my property management firms, when someone is late, they reach out to the tenant and they know the local resources and housing authorities and grants to work with people. So pretty much out of like 400 units, maybe 3 people are late, but they'll call them, because then they'll get the process started on going, oh, well, locally we have Impact or this housing authority program to help people who are late with rents. And it's so funny when you have a good property manager or a good landlord with a good skill set. They're like, I go to rent eviction court rarely, but when I do, I'm looking at all these people who are 5 months late. Like, how does it get to this point? And it's just an example of being proactive and having your skill sets as a rental property or property management group being up to par. So you're not even walking into these situations. So many of these obstacles, with your knowledge and you building your knowledge, can be circumnavigated around. And it's definitely applies to these neighborhoods. So just always remember that as you go into this, your skill set will determine your success. So keep educating yourself, keep getting diverse viewpoints that will add to maybe the mainstream, because I find a lot of my advice is counter to the mainstream, but that works for this demographic. So just be very clear. If you're not into less than $80,000 houses or working class or low income minority neighborhoods, that is okay. It's not for everyone. But if you are, if you grew up with around it, if you're familiar, this is definitely an opportunity that your lower income roots, like mine, is actually a great benefit to understanding the people. So, my wanted to talk about the impact on COVID because we have been purchasing throughout this whole 2020. And there was just a brief moment in March where it really sort of contracted a little bit because everyone was scared to get on planes from like March to June. No one wanted people in their houses. So if it was tenant occupied, my clients who were purchasing couldn't get in to go look at the properties. But that did drop off around August. People were more comfortable with people coming in with their house with their masks. People were more comfortable putting their face shield on and mask and flying. So the interesting thing I saw between myself and all of my tenants were that our tenants in these working class and low income neighborhoods, they tended to be essential employees or were able to capture unemployment. Our rents in our houses are in modest price ranges, so they're like $800 $900 rents. So with that capturing of unemployment, they were able to pretty much stay in, and we had like less than 10 or 15% had real issues. When I would poll by group of 12,000 people, it pretty much, like I said, they're very proactive about going, hey, if you need help, these are resources. And honestly, the people didn't use the resources, but you got to understand this is a people business. The fact that the landlords in my group reached out with a solution, right, to assist was actually really good psychologically, because even though they didn't necessarily take the offer because they didn't need it, the fact that they did that showed that this person was working with them. And sometimes you really need to start thinking about what role you want to play. It doesn't have to be just numbers, and especially in this demographic or socioeconomic income, it is about community, right? You talk to each other, you rely on each other. So showing that arm can be a pretty big thing too. As I mentioned, resources are available to savvy landlords and property management companies. As I mentioned, knowing those local resources and giving them out early, you can circumvent a lot of these. But like I put savvy. So you have to make sure you are becoming better in your skill set, and that will make your entire business flow more smoothly. Whereas other people were really hurting, but it really went back to they weren't as up to date on their skills as they could have been. Community impact plays a big role, and it's not time to be a tone deaf rental property owner. Now, this does definitely depend on what market you're in, on how much they're like, sorry, eviction moratorium is going on, and in other places they're like, no, this is cut off. So that's definitely something we had to navigate, because we now, when we're looking at properties, we have to look at how they're treating the eviction moratorium. There's a federal level, but then every city, state has their local jurisdiction. But I actually prefer that because now we can see who they are before we invest a lot of money. Now we know they're the kind of person that are like, it is your responsibility regardless, and you might be left holding the bag. I want to know that about a city. If maybe it wasn't obvious a year ago, it's obvious now. So we use that as part of our um, uh, discernment and due diligence when looking for property. So it can be a negative if you're already in, but you always have the option to sell that property and purchase in another maybe more landlord friendly area. So, where do you find these houses? You can find these markets in this lower price range. They're not going to be in the West Coast. So, sorry, California. I work with a lot of California investors, and I usually help them invest out of state. But for the most part, they're pretty prevalent in the Midwest, the South, and the Northeast region. They all generally have a feel to them on how much cash flow you can expect in any. So in the Northeast region, it's more urban, it's more city. And with that, in this price range, it could be crime is more of an issue than maybe in the South in this price range, right? So we're very aware of that. And when I work with clients, I generally have them focus on the region that they're in, unless they're in New York and they really just want to fly to Florida, right? Because they love, New Yorkers like Florida. So unless it's like that, I really try to focus, but just understand that in this particular region, there's a different set of issues, right? And you're dealing with bigger cities, really bigger cities that are a little bit more, you need more oil and grease more wheels to navigate through. So some people take that on, but you really need to know what you're going into. Whereas in the Midwest, it's a hit or miss on what kind of neighborhood, if it's high crime or high rental area. In the South, generally, I've been doing this for 8 years, and it's interesting the trend. Before, if you got the houses in the South in this price range, were actually be in really good condition, so you didn't necessarily have to spend a lot on renovation costs upon purchasing and getting a tenant in really quickly, but the rents were pretty low, right? They were six, seven, $800, not like 900 or 1,000 or 1,100 for these price properties, which is really profitable for the cash flow. But there's been like a renaissance in the South. So all these Californians and Northeasterners and Midwesterners are moving to the South. So it's very interesting. So depending on the city, the rents have went up pretty significantly. So now we actually, in the real estate investing world or the rental property world, we talk about per unit. And per unit in the Northeast, we look at $400 to $700 in cash flow per property. In the South, we look at in the Midwest, 250 to 350 is good because the rents are not as high as an urban populated area, of course, right? It's more rural or more spread out, which makes the cost of living go down lower. But now in the South, 300 to 350, it just surpassed the Midwest, is actually quite common because of the influx of people depending on which market. So that's been a really interesting find. So before we really weren't paying attention to the South, and now there's a lot of opportunity. Um, that has some issues. You have to get on a plane and go out there yourself because sometimes the realtors are really close, keep their cards close to the chest because you're an outsider. So it's very interesting how we have to navigate like a slight little of the cultural politics down there. But they're generally found in suburbs or even an exurb. An exurb is like a more semi-rural area of highly populated cities. I generally try to have my clients see what they can find, and I have my own way of showing people how to do this in a really strategic and methodical way. There's one thing, if you know anything about me, I'm all about strategy. So we're methodical. We're not throwing a dart at the wall and hoping to see what it hits. We're very methodical, but I try to start with at least a 2 hour, 1 to 2 hour driving distance. That's more convenient for people. I did it when I started to build my portfolio, and that's what I needed. I was in DC and I can drive an hour north to the Baltimore region, or I can drive an hour and a half south to Richmond. And I did it. I'd leave at like 8. I get there at 9:30 or 10. I'd do what I needed to do and I'd leave at 3, 6 hours there, and I'd come back and we were good to go. So sometimes investing out of state is such a huge hurdle, but I try to tell people it's not necessarily a big commitment. You can choose to purchase a property that needs a ton of work, that needs your due diligence, but you can also do one that doesn't need any, but maybe increasing your price range. Like the sky's the limit on what you want to do and what you have time to invest. I've been doing this for 8 years. So I do tend to find that my younger, maybe single or no kid or married with no kid investors are more likely to take on that something at a lower price, but more of a renovation project. But I do tend to notice that my clients who are in a different demographic, maybe full-time workers, have a family, they're like, look, I'll just pay $5,000 more for a house and not do all that work. So they're more willing to come up with a bigger down payment. But we go over these nuances. It's per person and it's very individual. It's just really obvious after 8 years and working with hundreds of people, like who is ready or has the energy for what. But that's the beautiful thing about life. It should be like that. It's different for other people. So once you get past this hurdle and you master this is where the opportunities come from. Because a lot of my clients are DC, New York, Atlanta, all over Texas, mostly Houston though, in California. So off the bat, we are having to look for the deals in another location. And outside of me investing in this lower priced properties, outside of that, as an investor, for the most part, unless you come from generational wealth, unless you have a rich uncle or father or friends that you can raise money for, uh, learning how to go to the market that has the houses in the price range that's more affordable for you to purchase is a beautiful thing in general. Like that is what is going to get you the most money. Some people with the current investment advice that's mainstream that I'm very counterculture to and I'm proud of it is, stay where you can go and drive by it, or something that's normal. But the thing is, depending on where you live, that's a $200,000 house, that's a $150,000 house. So when we went through this crisis, or when I have a tenant turnover and I have a $50,000 house, my mortgage payment's like $400, if that, depending on the taxes. Right. So if I have a tenant that's not that, moved out, and it's 2 months on the market, like my house recently just was, that's $800 to carry those costs. Right. Whereas if I would have taken the traditional advice and necessarily just stayed local without being really discerning about my income and my budget level, I'd buy $150,000 house where it's like, $900 a month when the house is empty. So a standard 2 month turnover for one property and price range is a lot easier for me to sort of take on those carrying costs. Whereas in another market, because I decided to stay closer, 900 or $1,000 a month can be pretty debilitating to pay out of pocket just because you had a tenant turnover. Right. And so these are really things to think about, which is why for my target demographic, learning the skill set of investing long distance and learning the skill set of looking for more lower price and economical houses has actually been a very good benefit to us. But like I said, it's very counterculture. So it's always good to get a wide diversity of opinions, and opinions from different groups and individuals who don't necessarily have the same access to wealth. So we have to think of different ways to be successful as well. So you're always going to get good tidbits. So we had some questions submitted that I would just like to speak about. Someone asked, should I look into mobile and manufactured homes? And this is a great question because I was just recently working with a couple. I was helping them find properties. They were in Virginia. We were looking in Ohio for properties. But the way that they got their funding, there's two ways of looking at it. They were actually they were actually going into mobile home parks. So just a husband and wife couple, and they'd go in and they would buy a mobile home for like $1,500, 2,000, and they put about $2,000 to $3,000 worth of work in it and then sell it for 10,000. So they were flipping. I'm not into flipping, clearly, as I said, this is what they were doing. But it was interesting because at those price range, it's still relatively low enough where they can resell it to somebody who's looking for a mobile home. And you can do that in the mobile home parks, right? So I thought that was very interesting. Of course, be discerning about what you're doing and not pushing people who are already at the lower income of things out of the market, because they actually did come into a lot of us versus them. When people found out they were investors, they did not want to deal with them. So that was very interesting. They wanted to make sure that I was selling to someone else who just needed a low price place to live and work. And I completely understand both sides of it, and I empathize with both sides. But outside of that, when it comes to buy and hold, I do recommend them. I just don't recommend them in a mobile home park, because the mobile home park has a manager who manages the park, and he is like king of the park, or she. They're king of the park, and they could, if they wanted to say, you could not, you can't stay there any longer, or you can't rent, or they can put arbitrary rules on you, because at the end of the day, these are private places and private companies, and they can decide how it works. So I would absolutely recommend maybe you being a mobile home park owner. That's really good if you have some land. But if you don't have some land, just be very discerning about, there's, in those properties, I would not do it in a mobile home park. But what I have seen is, say, in certain parts of the country, for instance, South Carolina, 23%, so that's 1 out of 5 homes, is a manufactured home on their own land, right? And these homes are really nice before you get snooty. These are like 2,000 square foot homes, okay? They're really beautiful. And in those cases, they do tend to have a lower price range because they're not stick built, they are manufactured, but they're really high quality. And people live like that because it's a cheaper, more affordable way for them to get their own property and have their own autonomy. So in certain places, like mobile manufactured homes on their own land are great investment opportunities, because they're just not going to shoot up in value like a stick built home generally does. Not unless it's like, in New York City, then anything will go. And also, one more thing to add about mobile home investing is, oh gosh, I had a point, but we'll just keep going. And if it comes back, I'll let you guys know. So that's what I would say. Mobile home with land is a great alternative. Oh, I was going to say, other my clients have had big plots of land where they had a single family home, but it was economical in their case to put a mobile home on the land as well because it was cheap. Someone was giving it away, but they had enough space for it with the property purchase to put one more person, make their little driveway for it, and then have two incomes on one purchase. So in those cases, if you're really savvy, you know how to make the land work for you. So someone asked a question. They said they have a condo in Santa Cruz with about $300,000 in equity. Can I access? And they can access it, they said, if they file with high enough income. Should she leverage that and refinance into a down payment on an apartment? I love this question. So, what I love about it is that they're not selling, right? When you sell, you no longer have the capabilities of using it and tapping into the refinance, paying it off, tapping to refinance and pay it off and leverage it. So, we keep our properties, we don't sell. I would absolutely use the equity with that much going into a 6 to 20 unit apartment or being a partner in an apartment complex of that size is really big, and the returns are going to be bigger with the more units you stack on. So I would absolutely recommend it. I'm really big into coaching. I know what there's Joe Fairless. You can Google the name. Is a really good mentor for apartment homes. So I would recommend you learning from someone who has written books and who has a name in it, and just learn about the process before you just do it. It's amazing how many people want to put that much money down without reading a book. Okay, so at least read a book. It's always best to go with someone who has experience, if you can, who's sort of known in that multifamily apartment range. But definitely, you are thinking in the right place. You absolutely can, and I absolutely would. The only thing I want to say is I would not purchase in California with what is going on with the restrictions with COVID being way more stringent. And I heard that there's something that was passed that Governor Newsom wanted to um, have the government purchase all foreclosed homes and make like a monopoly. Like there's so many things going on that I do not like that can infringe on your rights as a landlord. California is a great place for a lot of equity that you can get, right? Because the prices are rising. But I don't recommend it for a lot of different reasons. Sometimes my California clients who would like to stay there just because the cash flow is not as high as other places. They really have the price to what you can get in rent just about they're just about equal sometimes. So you can choose California, but I would definitely take it out of state, knowing what I know about California as someone who's been looking. I periodically look at it over the years, and it's just really hard to make your money stretch further out there. So love what you're thinking. Yes, I do. I would get comfortable with maybe going a little out of state. You can even go to Las Vegas and find a nice apartment complex that you could probably buy outright that would give you a nice return on investment that can pay back the mortgage plus give you profit. Someone asked, how did I get started in rental properties? So, long story short, I was in corporate America after I graduated college for 3 years. And within 3 years, I was like, I do not like corporate America. I don't fit in, nor do I want to. I am quite comfortable the fact that I have working class roots. And so that's when I really started looking heavily. And someone said, what are the best type of rental investments in general? I'm biased. I'm going to say buy and hold. You get passive income, which I was at about $1,900 in passive income amongst my rental properties before when I got laid off at my job, but it gave me the time to write a book. I didn't have to go out and rush out to get a job, so I built a business. And I'm writing more books. So it gave me all of this access and pastime with relatively little amounts of passive income. So I love buy and hold, and I still have those properties, and they all doubled in value. If not, one of them tripled. So I am a wealth vehicle, so rental properties. So we are coming to the end of this. I really enjoyed this, and I hope you did as well.
Thank you, Lisa. That was fantastic. And we really, really appreciate it. And I think if anybody knows the mantra of A Million Acres, it's that we want to make real estate investing a reality for everybody, right? And that means literally everybody. Everybody in this country should have an opportunity to build passive wealth, passive income, and to elevate their levels. And I think Lisa's doing a fantastic job. She's doing great work in her communities, and she's making people who otherwise probably wouldn't have any idea how to get started in this, get started in this. And at the end of the day, that's what Million Acres does as well. So it's a good synergy. I love the presentation. and I come from similar background as yours, and for me, it's great to see and hear this information. And I think a lot of people need to see and hear this information. So, Lisa, thank you. Again, best-selling book, Investing in Rental Properties for Beginners. Working on a next book, Sub 30K Guide to Investing Out of State, cryptocurrency workshops. She's got a live workshop coming up on the 15th. Again, Lisa's website is affordablerealestateinvestments.com. So have a look at her stuff. It's great stuff, and we've really enjoyed it. And you can scooch to the next slide, Lisa. So real quick, in terms of Million Acres and a little bit about what we do for customers as well. So we basically, if you're familiar with Motley Fool, it's a subscription service. And with that subscription service, there's a couple of deliverables. The main subscription service of Million Acres is Real Estate Winners. And Real Estate Winners basically allows you to get investment alerts. It allows you to create a real estate portfolio and basically, enjoy returns in the 13, 14, 16% per year range. You basically get a little bit of an unfair advantage in terms of getting access to information that you otherwise probably would not get access to, as well as, just traditional great analysis of, let's say, a REIT stock that you might not have otherwise even considered investing in. So, you can get started on fool.com, Million Acres Lunch, that's the URL. And we'll get a copy of today's session sent out to everybody as well. Lisa, you want to leave with a few parting comments and then we'll wrap up?
Yeah, whatever you do, make sure that you're comfortable with it, you're not pushing it. And sometimes it's not always about money, it's about impact. So if you can keep that in mind, it'll serve everyone, including yourself.
Great. Thank you so much. Thanks, everybody, for attending. Have a wonderful afternoon. The session is now complete.